Yo, what up, fam? This is your boy, Big Walt, with a continuation of my public service announcement about cryptocurrency investment advice from Dr. Boyce Watkins and what you can do with all that. I'm not going to repeat the lead-in for part one. The link to that video is in the description below. I highly encourage that you watch that. Anyway, let's jump right back into my reaction to this video of Boyce Watkins trashing Coinbase. Rock with me. All right, let's continue, reacting to this video.
Crypto, you have things like NFTs that are taking off on the Ethereum network. You're going to have this interesting thing happening where a lot of people that are long-term holders of crypto are just buying it and holding it. They're not selling it to anybody at any price. So you have all these new entrants coming into the market that are all demanding this crypto. Well, what's that going to do to the price of crypto? What's that going to do to the price of your assets? I'm giving you a hint by holding my thumbs up. And so effectively, the crypto market's going to take off. Coinbase is going to benefit from that. What is fascinating yet sad is that Coinbase apparently, despite the fact that they are the stewards of billions of dollars in people's assets, they haven't learned proper security protocols to protect your money. The thing about Coinbase.
Yeah, again, he just doesn't know what he's talking about. Coinbase hasn't learned the proper security protocols to protect your money. There's no protocol on the planet that can protect a fool from themselves. If you don't have proper, hygiene around, your crypto wallet, if you don't have proper, awareness and practices around how you manage your passwords to your account, you'll get hacked. If you get silly, text messages, from hackers, trying to trick you into clicking some link that then allows them to add, some spyware on your device so that they can then, phish your passwords. There's nothing Coinbase or anybody can do to protect you from that. So, you can't, in the technology space, we always say, there's typically three things. There's people, processes, and technology, right? And so, you can have the technology to solve some of the problems. You can have processes to protect people, from some of their issues. But at the end of the day, that human error is going to be there. If the person, just doesn't have, presence of mind to protect what's theirs. This reminds me of a story, actually, and I'll try not to be long-winded. But my very first trip to Paris, France, I was, I think, 12 years old. And I can remember our tour guide, telling, all the women, do not have your purse just on your shoulder, wear it across yourself, right? That way it's harder for somebody to snatch your purse. And they told the men, don't wear your wallet in your back pocket, which was popular at the time. Like, keep your wallet in your front pocket. It's harder to steal it from you that way. Like, these are sound security practices to protect your money, right? And for people that don't know, and I'd never heard that before at that point in my life. But from that day forward, I always wore my wallet in my front pocket, no matter where I was, on some vacation destination or not. And likewise, there are things that people should do, to protect themselves, right? Like, I don't hear Boyce telling people to, use good security practices and buy yourself, a Ledger Nano, right? And protect yourself like that. But he should. And again, like, which crypto is he talking about? He keeps saying, is the price of crypto going up? Like, are you talking about the price of every single cryptocurrency in the market? Or are you talking about the price of one versus the other? I mean, there is some truth that, like, all boats, rise and fall at the tide. But at the same time, you can have a situation where Bitcoin, is going down and Ethereum's going up. Look, man, to be a PhD in finance, it just strikes me as odd that he hasn't mentioned the word crypto economics or tokenomics, right? Like, or the term governance model, right? These are the things that you should be paying attention to figure out like which coins or tokens you should invest in or not invest in. And he's not mentioned any of that. And then, if you think about some coins, like let's just take Dogecoin for instance, has a lot of inflationary pressure built into it. I think, what is it? 14.4 million Dogecoins are created per day, which is about 10,000 new Dogecoins per minute. And this is in perpetuity. It's going to keep happening. So think about people complaining all the time about, the Fed with their quantitative easing, and by printing more money, it caused the value of the US dollar to go down. Like, this is what Dogecoin is. Dogecoin is perpetually quantitative easing the currency. And so, sure, it goes up sometimes because fanboys will get behind it and they'll pump it or whatever, or Elon Musk will make some kind of statement and pump it. But the tokenomics around Dogecoin, the governance model is such that it's got inflationary pressure, persistent, which is always going to force the price to go back down, after the pumps are over. And so, if you contrast that with Bitcoin, we all know that Bitcoin has a $20 million cap. There will only ever be $20 million Bitcoins. And they've got these halving events that happen, over time, where fewer, Bitcoins are produced, at each halving event. And so it's going to get, more and more, scarce in terms of new coins, getting produced. And this, is deflationary. And that's what, if you're an investor and you want to hold, right? Like, there's a difference between like trading, where like, if you're just trading, sure, somebody can pump Dogecoin and you can buy some, sell it real quick and make a buck. But if you're a hodler, right, if you just want to buy and hold, then you need to look at the things like, does this coin have deflationary, forces baked into its governance model, right? Because that's going to make a difference. And so, if you look at, what happened recently with the deployment of EIP 1559, on the Ethereum network, it causes the ETH that was used for gas, which was typically paid out to the miners, that's now getting burned. And we saw, firsthand that sort of deflationary, pressure caused the value of Ethereum to go up. I did a video not too long ago, showcasing the fact that I forgot exactly which day it was, but for the first time ever on that particular day, more ETH was burned than minted. Right, that means the number of Ether, decreased. The amount of Ether decreased, and when that happens, that's the opposite of your Fed Reserve quantitative easing. That's going to cause the price to go up, and so you need to know these things, because if you don't have a sophisticated investment strategy and you're just the buy and hold type, then you need to know which tokens or which coins are worth hodling and which aren't. And if you don't know the governance model, if you don't know the tokenomics or the crypto economics around that particular coin, then you're flying blind. And if you've got Boyce Watkins, telling you, I'm bullish, on crypto and all crypto, like, really, bro? It really is that what your PhD in finance teaches you? Y'all need to be careful following this cat, man. I'm telling you. Boyce provides no proof that crypto, whatever the hell that is, he provides no proof that it's going to take off. There's no mention of any fundamentals, which is what we should expect from someone with a PhD in finance. So anyway, that was long winded, but I'm telling you, I don't want to see people getting taken for bad, yo. You know what I'm saying? Like, you need to have a very discriminative, discriminatory ear, when you listen to people telling you, how to invest your money, and be skeptical and look for receipts, look for proof, look for fundamentals. Has he showed you any charts? Did he show you some kind of head and shoulders chart where he says, like, the next 30 days is going to move this way? Like, I mean, again, that's what I would expect for somebody or from somebody with a PhD in finance. Anyway, let's continue.
Coinbase, you must understand, is that Coinbase is not a bank. Coinbase is not Bank of America or Chase. They
right.
do not have
Narrowly
FDIC
speaking
insurance
facts.
to get your
Narrowly
money back.
speaking facts.
Hackers in crypto can hack into your account and steal the money and do it almost completely anonymously. There is no ability in many cases for them to go back and get anything. There have been billions and billions of dollars in Bitcoin that were just lost because somebody took it and they don't know where they went, or because somebody literally lost the private keys and they can't get them back. There was one guy in England who had $250 million worth of crypto, and he had a Bitcoin. He had it on a hard drive, and he actually threw the hard drive away. And he was offering the city of London millions of dollars to dig up a landfill or something so that he could go find his lost crypto. Okay, so effectively, what I would argue for you, in my view, is that you want.
All right. He recovered a little bit, explaining that Coinbase is not a bank, right? So I'll criticize, where necessary, but I'll give credit where credit is due. He came correct. So he says that Coinbase is not a bank. But again, he shows his ignorance when he suggests that it's Coinbase's responsibility to retrieve money that was stolen from you at no fault of Coinbase. Again, if Coinbase mishandled their own master keys and a hacker was able to come in and just clean out, hundreds of millions of dollars, out of Coinbase, some of that 100 million happened to be your money, then, you should look to Coinbase as like, yo, you need to make this right. Now, because they're not a bank and there's no FDIC insurance, whether or not they make it right, that's a different story. But in terms of you being or standing in a righteous position, you'd be righteous if you were looking at them like, hey, where's my money? Because of your negligence, my money's gone. But that's not what's going on here. And the point is, you can't conflate a major hack of a cryptocurrency exchange with somebody socially engineering, an individual so they can hack into an individual's account and steal, money from that person. Like, those are two different things. In the second part, again, that's not Coinbase's responsibility. They're just very different scenarios that have nothing to do with one another. So anyway, let's continue. I need you to do me a favor, fam. Please click that subscribe button and the like button. It might be a small thing to you, but to us it's huge. We're trying to hit this 1,000 subscriber milestone one subscriber at a time. So YouTube will recognize us and give us access to the tools that will allow us to bring you more and even better content. Thank you for your support, fam. We really appreciate you.
To be careful. I'm not telling you to get away from Coinbase, but let me tell you what I did. The best advice I could ever give you, and this isn't really advice, this is just me sharing information with the people I love. The best thought I could share with you is what I did for myself and my family. I have money on Coinbase. I like the convenience of Coinbase. Yes, their fees are not as solid as they could be. They could have lower fees, but I like convenience. I'll pay a slightly higher fee for convenience where I can do things on an app. But what I did do was this wake-up call, seeing people's accounts get drained, reminded me of the importance of diversification. When I talk to you guys about asset diversification, which is literally...
This dude obviously uses Coinbase as a bank. I'm going to do a whole episode about why that's not smart. But anyway, and then he's talking diversification. Let's see what he's talking about.
One of the top 2 or 3 rules of investing that you follow if you want to protect your money. Diversification isn't just spreading your money across different stocks. It isn't just making sure that you buy different cryptos. It isn't just investing in different things. It literally might come to diversifying where you keep your money. So even with my crypto, I put my crypto on 2 or 3 different platforms just in case an account gets drained. Also, with diversification.
All right, you just got, again, bro, like, Boyce, holler at me. I'll teach you a couple things. Obviously the people in your camp, who are counseling you on crypto, they probably don't know what they're talking about either. This dude just said, and look, I'm clowning him. There's some legitimacy, but only a small little bit of legitimacy. But he says he puts his crypto on 2 or 3 different platforms in case an account gets drained. I mean, for a novice, right? Like, I mean, for my grandma, like, I guess. But nah, yo, you need diversification in terms of hot wallets and cold wallets. I don't hear Boyce talking about what's a hot wallet, and what's a cold wallet. You need diversification on custodial wallet versus non-custodial wallets. Coinbase is a custodial wallet. That means Coinbase keeps the keys to your crypto. You don't have the private keys to your crypto when you keep them on Coinbase's wallet. And when Boyce is talking about he spreads his crypto around multiple platforms, he's talking about multiple custodial wallets. There's a phrase, in the crypto space, not your keys, not your crypto, right? You don't own shit if you don't have the private keys, to your crypto wallet. So first of all, when you put money, in an exchange and you like leave, or when, let's just say you use an exchange to purchase some crypto, when you leave your money in the exchange, that's you using the exchange as though it were a bank when it's not a bank, right? And the exchange maintains the private keys to the crypto that you think is yours, but it's not really yours. And so, I would recommend people, in terms of diversification, the first thing you need to do is diversify between, custodial and non-custodial wallets. If you want to, use a non-custodial wallet, depending on what you have, like if you have Ether, for instance, you can get, MetaMask. Like that's the first entry level, sort of like wallet that people go to. And if you have like, tokens, that are Ethereum based, tokens, you can use MetaMask for those as well. And so a lot of NFTs are built on top of Ethereum on the ERC 721, standard. And you can use those or you can store those in MetaMask as well. But MetaMask is a hot wallet. That means it's connected to the internet. And even though it's your private wallet, which is safer than having your crypto sitting in an exchange, it's still a hot wallet connected to the internet, and that has its own risk because hackers can get to it from the internet. The next thing, the next level of sort of diversification or strength from a security perspective is to go out and get yourself a hardware wallet. Right. This is a cold wallet, right? This is offline. This happens to be the Ledger Nano X, a very good product. And you can store your Bitcoin, your Ether. You can store all sorts of coins on there. There's not too many things that Ledger does not support. But the bottom line is that's a hardware device. It's not connected to the internet. Your private keys are locked in there. There's certain, as you configure it and get it set up for use, there's certain things that they have you do to mitigate the risk of you losing the keys. And so, when you have your crypto, in a cold wallet, like Ledger, non-custodial, you actually do own your crypto at that point. What Boyce Watkins is talking about, like, spreading his crypto across multiple, platforms, he doesn't own any crypto at all. He's got crypto sitting, in crypto exchanges, where somebody else owns it. And he's basically got an IOU. It's like the bank. And I'm going to do a video on that soon as well. If you haven't heard anything I've said on this segment, you need to spread your loot across multiple wallets in the hopes that if the private key of one of those wallets is compromised, the private keys of the other wallet will not be, right? And so, I'll get into this hierarchical deterministic wallets, these HD wallets, that are all the rage, and are quite useful. But that's a longer conversation, but Boyce doesn't even allude to that. He has no idea what an HD wallet is. He has no idea, evidently, what a custodial wallet is versus a non-custodial wallet. Within the context of non-custodial wallets, he doesn't seem to know what is a hot wallet versus a cold wallet. He don't know nothing. So is this your king? Is this your champion? Is this who you listen to guide you in the crypto space? Is this who you listen to guide you on how to invest in crypto and how to safely maintain your cryptocurrency. This guy's sitting up here saying Coinbase is trash because Coinbase couldn't protect you from giving up your password to somebody who wanted to steal your crypto. It makes no sense. Anyway, I'm being long-winded, but I'm super passionate about this stuff, yo. Let's continue.
I invest in a lot of different countries in case one country just starts tripping. China has been tripping. China's been smoking the crack pipe or something because they've been destroying their companies in what is an inexplicable way. We lost a ton of money on a Chinese company called Tekadu that we had invested heavily in because all indicators were go on this company. Everything looked good. We were making a ton of money. And then the Chinese government came in and made a couple speeches and all that wealth was gone. The only thing that saved that investment was the fact that we had diversified our money and that we had actually protected ourselves against the downside. But even with that downside protection, I still got hammered pretty bad, right? So that's the way investing works. You're going to lose money. You're going to have unexpected things. When you're investing, you're dealing with at least three things. You're dealing with the known, the unknown, and the unknown unknowns. These are things that are going to happen, variables that are going to emerge that you don't even understand. It's like investing can be like a Tyler Perry movie where 1 minute you think things are going one particular way and then
wait, what? I'm bumping the mic. This Bama just said investment can be like a Tyler Perry movie. Like, bruh. I guess life is like a box of chocolates, yo. This dude sounds like Forrest Gump, straight up. I'm shaking my head, yo.
Suddenly things change, and then they introduce new characters who come in with a whole different agenda that completely disrupts the story, right? So understand that when it comes to investing, the best way to protect yourself is to spread your money out. Don't put all your eggs in one basket. When I'm looking at this thing with Coinbase, let me finish up this Coinbase conversation. A spokesperson for the cryptocurrency exchange said the company is working on customer service and soon rolling out more support channels. Well, Coinbase, you should have done that before. And one of the things that's really interesting to me is that despite the fact that Coinbase allegedly is causing all these people to lose their money, their stock price barely wiggled. The stock went up 1%. So the investors and the stockholders aren't really being hit by this. It's the people that are actually invested in the crypto that actually trust their money on this app.
Boyce, you said that, quote, allegedly Coinbase is causing all these people to lose their money, end quote. Coinbase is not causing people to lose anything. Coinbase is effectively operating a cryptocurrency exchange. Okay? If Coinbase has a huge hack like Mt. Gox, or a hack that's happened to so many of these others, or the poly the polychain hack that happened not too long ago, then you could talk this talk. Coinbase has not had any such incidents. So Coinbase is not causing people to lose their money, boys, right? If you write your password on a piece of paper and you leave that password on your desk, and then somebody comes, after hours to your desk at your office, and they see your password on your desk and they log into your computer and they do all kinds of things and perhaps take money because, your crypto wallet was on your computer, that's not Coinbase's fault, right? Coinbase can't protect stupid people from doing stupid things. And, the quicker we get hip to this, the better off we will be, right? Coinbase nor any other exchange, Binance, no, they can't protect you from this, right? Even if you go so far as to have your own, wallet, you could have your MetaMask wallet, a non-custodial wallet. You can still do stupid stuff with that, right? Outside of the crypto space, people do stupid things with money all the time. They get robbed, they get mugged, all kinds of stuff. And no institution is responsible, for making them whole after that happens. And to say that it's some institution's fault that you individually got robbed is silly. You individually got robbed because you either did something stupid from a security perspective, like, speak your password out loud to prying ears, or, you fell for some phishing scam and you click all kinds of web links, when things come to you without realizing, or knowing who they're coming from, and you inadvertently downloaded, some spyware, some malware that exists, for the sole purpose of getting information from you so that your accounts, crypto or otherwise, can get drained. That's a dangerous statement to be making. And it's kind of a libelous statement, real talk, or defamatory in the least, to say it's Coinbase's fault that these people's, accounts are getting drained. Unless you got some receipts, bro. As far as I can tell, all he's doing is reading, some CNBC article, reading it with no expertise whatsoever, saying, I got a PhD in finance. So trust me that when I read you this CNBC article, I'm explaining to you, what's really what. Look, man, I don't even know what to say. Let's just continue.
That's a problem, and that's an embarrassment. And I would really like to know more about how this was even allowed to happen. This is insanity to me. And you got poor people out there that have their whole accounts drained and they have no recourse. And so be very careful. Okay. So I'm not saying avoid Coinbase altogether. I think a lot of the apps have issues, but you want to spread your money out. And also those people who love Bitcoin and love crypto so much that they're doing crazy stuff like getting their whole paycheck in Bitcoin and all that. There's nothing revolutionary about doing that. There's nothing that about that move that makes me say, wow, you're a really forward thinker when it comes to wealth. What that makes me say is, my God, if that doesn't work out for you, you are screwed. You are screwed with an iron rod. Because let me tell you what, just yesterday, I was telling you guys about an NFL star by the name of Clinton Portis. Clinton Portis was the highest paid athlete in the entire NFL. Sorry, highest paid running back. He got a $50 million deal back when nobody got $50 million deals. Well, Clinton Portis had this investment advisor. I think one of the guys' names was Lubin, and maybe another one was like Rothenstein or something. So the Lubin and Rothenstein were like, oh, don't worry, bro. We're going to take good care of your money. Well, you know what they did? They took his money and they put it into things like casinos. Somebody had a casino, so they took $1 million of Clinton Portis's money and put it behind this casino. The casino went bankrupt. Clinton's $1 million disappeared. That money didn't go away, though. That money went into somebody else's pocket, right? That money went toward expenses to run the casino. So other people were hiring their friends and saying, hey, we got a live one over here that's got a bunch of money, and he's going to back up. We're going to gamble with his money. So that means that when the casino failed, Clinton was the one who lost everything. The people that went to go work with the casino, the people that were partners with him, they didn't lose everything. They didn't lose what he lost. Do you understand what I'm saying? So ultimately, when you're talking about situations like this, these economic tragedies where people lose everything, in most cases, it is because they are not diversified. So if you walk away from this short discussion with anything,
That's the worst analogy ever. What do two grifters hustling Clinton Portis have to do with blockchain, cryptocurrency, or cryptocurrency exchanges? Oh, absolutely nothing. Boyce must be trying to fill dead air at this point. Even in that story, he spoke on one of Portis's investments. That didn't mean that he wasn't diversified and had money in other things. Like this house of cards is easily knocked down. Bottom line is, I'm not, saying that Coinbase, is the cat's meow, or I'm not advocating for Coinbase. I'm not detracting, from Coinbase. From what I can observe, Coinbase is a relatively solid company. And, unlike many of the other cryptocurrency exchanges, I'm not aware of any major, loss of funds through hacking, on Coinbase's part. So, Boyce doesn't know what he's talking about. And, if you've learned nothing else, hopefully you've learned that Boyce doesn't know what he's talking about, at least when it comes to cryptocurrencies, or blockchain technology, and or investing, in cryptocurrencies, and or how to protect yourself so that you don't get hustled or that you don't get, robbed of your cryptocurrency. So anyway, that's that. I think I'll put an end to the carnage, fam. This video goes on, and I've got a lot to say about a lot of things that I'm hearing in this video. But at this point, I think the point has been made. You get the point. But tell me what you think, fam. Am I being too critical? Or does Uncle Boyce not know what the hell he's talking about? I'll see y'all next time I pull up on the block. But until then, holla.